Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, January 7th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. S&P 500 and Dow are at records. NASDAQ and Russell are lagging, especially the Russell. Market breadth is still showing a bearish divergence. We'll look at that. Junk debt also is quite worrying, and we'll look at that. This could be bad for stocks in general. Treasury bonds almost completely collapsed, and 10-year yield is now a 2-year high. So that's a big deal. Dollar and gold interplay, we'll look at that as well. And Bitcoin, also a big deal. Looks like it's bearish now. Now, if you're a subscriber, we're also going to cover all of these various securities, stocks, ETFs. Some of them are quite speculative. Some of them are very interesting names. And yeah, subscribe and check it out. I can be found at MasterChartsTrading.com. Right, let's get right to it. S&P 500. We're looking at S&P 500 on daily time frame. I'm using my indicators. You can see them on this chart: green, blue, red, and yellow lines. They are basically a support and resistance. So if a stock is above the line, for example, this stock S&P 500 is above the green line, so it is acting as support. You can kind of see it. If it's below the line, it will be acting as resistance. Now you can always look at it on daily time frame. This is daily charts. You can look at it on weekly charts. All you need to do is change the settings. So for weekly, you go to 52, and if you want to go to monthly, you can also do that. You can go to 12. So overall, it's the same thing. Looking at this daily chart, it's just much easier for me. S&P 500 right there on the 4th of January hit a all-time record high and pulled back. You can kind of see that we've been trading above and kind of coming down to this green support resistance line, multiple occasions. So we had several occasions here in December, had some in October here. Before that, it was way back in October 2020. So you can see that we haven't even touched this blue support resistance line. We've been basically trading above the green line. So this is extremely strong, extremely bullish behavior. Ideally, I would like to see it pull back towards the blue support resistance line, because it's not as high risk entry in my opinion. Dow Jones also made a new record right there on the 5th of January, and now it's pulling back. Dow Jones actually did touch this blue line right there on the 1st of December. So if you were able to get in right there, this was a wonderful opportunity to get in on Dow Jones. Overall, there's not really much difference. We can look at monthly. Let's look at monthly chart. Same thing. This opportunity to buy was back in May of 2020 right there. This is a monthly chart, remember. So each of those candlesticks is 1 month's worth of activity. It's 30 days or whatever, 4 weeks worth of activities. So it's, a lot of information compressed into one candlestick. But you can, if you're a very long-term kind of trader or investor, you can totally use it. I prefer to trade on daily charts, but you can use, weekly or monthly, it doesn't really matter. You can see that we're basically making new records after new records. So for me to be interested, here's Dow Jones, for example, right there. You can see it touched this blue line right there. So on a daily chart, it was more easier to get in than on a monthly chart. It's kind of difficult to get in on a monthly chart, but not impossible. So generally speaking, I like to trade on daily charts, maybe on weekly charts. So you can also look on weekly charts. Here's weekly Dow Jones right there. Week of 29th of November was an opportunity to get in and you would have been already in profit by now. NASDAQ. So NASDAQ made a new record back in November and actually hasn't yet made a new record since then. So for now, we're simply waiting. Overall, NASDAQ, we can look at Dow Jones, rather NASDAQ correlation. This is NASDAQ, QQQ. And down below here is correlation to S&P 500. So correlation and causation are not the same thing, but correlation means that they tend to move together in lockstep. And you can see they are extremely correlated, NASDAQ together with S&P 500. So the fact that it didn't make a new record, not sure it actually means much. So we'll just need to watch and see what happens. Now with small caps, this is a pretty obvious divergence. So a record was made right there on the 8th of November, and then we pulled back quite sharply. We had an opportunity to get in. In fact, this was an alert here in early December. But since then, we were not making new records. So, you know, whereas S&P 500 made a new record literally 3 days ago, S&P small caps are actually not even close. What's worse is that right now you can see that we closed below this red support resistance line. So this is caution. You can see I sent to my subscribers caution. This is not a great sign. Additionally, this yellow line is actually bearish levels. So this is really significant underperformance by the small caps versus the large caps. You know, if the large caps are making new records and small caps are literally about to enter a bear market, this is a big divergence. And so to understand what's happening, we need to look at market breadth. And here it is. So I'm looking right now at New York Stock Exchange advances minus declines volume. So if a stock has positive volume during one of the days, we're going to assign it a positive sign. And if it's going to be a negative volume, so for example the stock dropped, then we're going to assign it a negative volume. Then we continuously add the previous volume to the next volume, and we get what's called cumulative line. So this is a cumulative advances less declines volume. And you can see it's showing a clear divergence, whereas S&P 500 on the bottom here, this is just a S&P 500 index, you can see it just made a new record. The advanced decline volume hasn't made a record since June of 2021. So this is over 6 months of significant underperformance, and it is clearly visible. So overall, not a great sign. In the past, such divergences worked quite, I mean, it was not great, honestly, for the stock market. So it has happened in the past, and quite often the resolution is to the downside. So we need to be cognizant of this fact that small caps are actually approaching bearish levels, and the market breadth is quite not very robust, not at all very robust. So I keep saying that we should be making new highs for the entire market. So right now what's happening is large caps are driving the stock market higher, while the small caps are obviously underperforming, and this is reflected in this chart of the advanced decline volume. It is clearly visible here. So we need to be, there's a possibility of stocks coming under significant pressure in the near term, unless, of course, we make a new high for the advanced decline volume. Excuse me. So let's hope we do. But yeah, let's be on the lookout for small caps entering a bear market. We can look at the monthly chart too. So let's zoom in. Okay, so this is a monthly chart, and you can see we're approaching bearish levels, and also this See how narrow the lines are? So the green and the yellow lines are very close together, and the price has very easy time to get to the bearish levels, whereas back here you can see they were way far apart. Right now they're really close together, so you can see it on, same thing on the daily charts. See how wide apart the lines were, and then all of a sudden they got narrow. So this, when the lines narrow like this, the price has easier time of getting to opposite direction. So if it was going up in this case, now it could be turning around into a bear market. So we should be on the lookout for that. Additionally, so this is junk debt, so high yield bonds, JNK. So this one also, you can see how narrow the trading range has become. So the distance between the green and the yellow line, was really wide here in 2021, and then it got narrower and narrower and narrower, and the price actually went into the bear market right there on 24th of November, but reversed. So right there on the 27th of December, it looks like we reversed back into the bull market. However, this was really short term, and now we're approaching the bearish levels yet again, and it seems like we're gonna hit them. We're literally like right there. So 107.09 is a line in the sand, coupled together with this fact that small caps are also approaching bearish levels. We could be in some rough times for the next few weeks to month. The reason why I'm junk debt, so I'm going to look at monthly charts again for junk debt, and I'm going to show you the correlation coefficient again. So this is monthly correlation between junk debt and S&P 500. Now, it's not as clear cut, but by and large, junk debt correlates positively, and occasionally there's a negative correlation. But overall, junk debt and stocks correlate positively. In other words, if one goes one way, the stocks go up, for example, junk debt will also go up, and vice versa. If junk debt goes down, stocks may actually follow. So will junk debt sink the stock market? We'll see. And looking now at bonds, so this is IEF 7 to 10 year Treasury bond fund. So bond prices, this is bond price, this is the actual ETF that holds bonds, versus yield. They move in opposite direction. So if bond prices are now at a multi-year low, you can also look at monthly chart, for example. And even though it's hard to see right there where I'm hovering, this is a 2-year low. This is same price as it was in early 2020. So this is not a great sign. Again, in this case for the Treasury bonds, it does make sense because of what I'm hearing. The Federal Reserve is about to start, selling bonds. So yes, it does make sense. So if you are a bond investor, I would definitely be out of this IEF for sure. I would have been out of this a long time ago. I would have been out probably back in 2021, right there where I'm hovering, in February of 2021. This was the last time I would have considered it to be in a bull market. So now we're making new lows again. So if we look at the TNX, which is a 10-year Treasury note yield, and I just said that bond prices and yield move in opposite directions. So yes, indeed we're making a new high. So this is a multi-year high or 2-year high. You can see we're above the February, January 2020 levels. So yes, this is obviously something to consider. If you, for example, are trying to get a mortgage or whatever, then most likely the mortgage yield or the mortgage rate will be higher for you. in the near term. All right, looking at next, we're going to look at the dollar versus gold interplay. So again, dollar DXY. Dollar, was in a bear market back here in May, June of 2021. And then finally it broke out right there on July 13th, 2021. And made a new nice run. So right now, it seems to be stalling and it doesn't seem to want to go higher. So I think we're going to be pulling back for the dollar. And since gold is traded in dollars, XAU USD, gold has had multiple whipsaws. You can see there was just a lot of, this downward facing arrow, some of them were successful, but then, for example, this one in November and this one, bullish breakout was not successful. Another in late November was not successful. So now we're the latest signal is bullish, to the upside. So if dollar drops, DXY, dollar will drop, then gold should benefit. So let's see if it does. The latest signal for gold was bullish. So I would be thinking about buying it. But then again, the bearish levels is 1766, so it's not that far off. You see how close the bullish and bearish levels are. So let's see if we go, if we go down again, then we will we'll play to the downside. If we break out, continue higher, then we'll play to the upside. So for now, let's just wait and see. But the latest signal again was to the upside. And finally, here's Bitcoin. So Bitcoin again was in a tear. We traded Bitcoin. I'm going to show you. So this is Bitcoin again on monthly charts. My algorithm is just basically buy above the blue support resistance line right there. So on close above it here in July 2020, around 9,000 or so. Huge run. Couple more opportunities to buy. This is a monthly chart, remember. You could also do the same thing on daily charts. So we were buying it, and there were occasional, like for example, this was a whipsaw in July of 2021. But by and large, we're, correct basically. So right this instant, we're seeing the opposite. We're seeing Bitcoin move to the downside. And, if I had any Bitcoin, I would definitely be out for sure. But also, if I had any opportunity to sell it short, I might be considering it as well. How low will it go? So looking at as a weekly chart, you can also same thing. So there's a weekly chart right there. The problem with Bitcoin is that it's traded 24 hours. So you can see that this line, for example, this blue line right now, or this red line is 43,875. But on weekly it's 43,832, and on monthly it's 43,875. So sometimes they're the same, sometimes they're not the same. But because weeks for Bitcoin don't really matter because it's traded 24 hours, this number might be slightly off. But overall, you can see that it's given us the same signal. It's given us a bearish signal right there. And easily 35,000, possibly lower. It's very easy for it to collapse to like nothing, 4,000 for example. So right this instant, I would be out of Bitcoin, potentially thinking about selling it short. Okay, let's see if that was it. Yeah, that's it for this week's recap. Head over to MasterChartsTrading.com, one word, MasterChartsTrading.com, click on products, sign up for one of the products. I have 3 different products. I have the trading indicators, so the indicators are these lines. They're quite useful, I think. You can use them to trade pretty much anything you want, any stock, any security. We trade all kinds of securities, you can see. All of the securities we trade using my indicators. Also, I have a newsletter, so you can sign up for that. all. You can get both alerts, indicators and the newsletter together. Sign up for that. And if you have any questions, please let me know. Again, thanks for watching and have another great trading week. Bye-bye.